Welcome back, Turning Hard Times to Good Times. I'm your host, Jay Taylor, and we're really pleased to have Alasdair Macleod with us once again. And all of you should be keeping an eye out for Alasdair's weekly missives that come out at GoldMoney.com on the research page there every Thursday. And it's must reading if you're a serious investor. I would say it's certainly a different view than you're going to get on CNN. Or at MSNBC or Bloomberg. Or Fox Business even, for that matter. So it's really hope that you'll pay attention to what Alasdair is doing. And he's here, one of our most frequent guests for a reason, because I value him and his work as much as anybody out there. So thank you, Alasdair, for being with us once again.
That's my pleasure, Jay.
It's really good to have you with us. On September 28th, the Bank of England was scheduled to hike rates, I believe, by upwards to 1%. Instead, it pivoted to a kind of quantitative easing where they bought long-dated gilts in order to suppress the rate of interest. And now we learned just this morning that the BOE is expanding its gilt buying program in an effort to halt market dysfunction. Could you walk our listeners through the mechanics of this financial crisis? Why is there a problem?
Well, there is a problem because with ultra-low interest rates, the pension funds have been unable to get the returns to match their liabilities. So what they have been doing instead is they have been, investing, if you like, via specialist derivative guys in leverage to try and leverage up the difference between the cost of money and the returns on gilts. And they do this basically through the repo market and also interest rate swaps. But the repo market is probably the important one. And the great thing about repos is that you can leverage up hugely. There is a limit on the degree of leveraging up, and that's 7 times. But the downside on this is that if, let us say, the value of the collateral starts falling, which in this case is gilts put up as collateral by the pension funds, then they have to top the situation up. So, they need to raise the cash in order to provide the extra collateral. So what it's done is it created a run on the gilt market. Now, to some extent, the idea that the problem is only this is completely wrong, because if you look at the yields on the US 10-year Treasury, the yields on the Euro 10-year Treasuries for the various member nations of the Eurozone, you see exactly the same thing. These bond rates are rising, and they're going to continue to rise. And furthermore, we know from the rate of inflation in most of these countries that they've got to rise even further. And it's that is putting great strains on the system. So I think any nation which has a large level of repo outstanding, I think it signals that they've got a real problem. And in the UK, there's certainly a fair amount of repos which are being done by pension funds and presumably to a lesser extent by insurance companies as well. But the real problem, I think, is going to be in the Eurozone, where the level of repos is enormous. The whole of the Eurozone financial system basically works on repos. It is that creates the imbalances in the Target 2 system. And that is a bomb which I think is due to blow up. And it'll blow up just as surely as the gilt market has blown up in the face of the Bank of England in London. So it won't just be the Bank of England intervening in the markets. I think in a very short order, we'll find that the ECB is doing the same thing. The situation in America is rather different because the outstanding repos are not that much, but the reverse repos, which basically go the other way. In other words, what happens is there's too much liquidity in the banking system, and it is being absorbed by the Fed, and they're paying a rate of interest for it. those reverse repos are effectively taking liquidity out of the system. So in America, it's the other way around. But there is no doubt that what we're facing, Jay, is the early stages of a wider derivative problem. And that should actually scare us. And we've seen this, I think, this is probably behind the problems that Credit Suisse have faced, because Credit Suisse certainly has its problems, but no more than any other of the European banks. I look at the rating for Deutsche Bank in the market, and it's very, very similar. We know they've had problems over time. But when I look at Credit Suisse, and I sort of think, what is it that we don't know about? And the more I look at it, I think it has probably got something to do with derivatives going wrong for them. And that the derivative market, we're talking about 600 trillion worth equivalent. Yeah, that is the total outstanding OTC market according to the Bank of International Settlements as of last year. We don't have more recent figures, but that is the amount that the derivatives, the over-the-counter derivatives, actually stand at. And this is, I think, very concerning. So you can see that any trouble, if you like, in the derivatives space is going to have enormous consequences. And the problem with derivatives is that ordinary people like us who don't deal in these over-the-counter derivatives, unless you actually do have a bit of an understanding what they're about, this is the tip of a mountain which you don't even know exists. Mm-hmm. It is an extraordinary situation.
Well, last week you mentioned to me that you thought the BOE's action on the 28th of September may well be a turning point, and between then and now, are you equally convinced or more convinced that may have signaled an inflection point?
Yeah, more than ever. Just to clarify, when I say it's a turning point, it's a turning point in the wrong direction. It's a turning point, I think, towards crisis rather than what we would normally regard as a turning point in markets, and that is that the market has now found a bottom and we're about to recover. I'm afraid this is not the sort of turning point you really want to dwell on. It's, I think we are literally on the edge of the banking crisis, which I've expected for some considerable time. There is a very high risk that it's going to happen in the next few weeks.
Yeah. Well, as you mentioned, it's not just the UK. It's Europe is in trouble, but also you put out a tweet on the Bank of Japan, the Japanese yen, I guess it was. You tweeted this. You showed this chart in this sort of wedge in which it looks as though the yen is in real big trouble. Clearly, it seems to me that the Bank of Japan has done what you talk frequently about in the 1720 France with the Mississippi bubble and how they tried to defend those securities. It looks to me as if the Bank of Japan is they're suppressing interest rates. Their interest rates are, I think, something like 0.255, which is already way over. It's over their line in the sand, as you point out. And you put out this chart, which of course people can't see. We're here on this audio format, but it looks as if the yen could be ready to almost evaporate into nothingness.
Well, certainly, I think when it breaks this 145 level convincingly, it's currently standing at about 145.6 or something. Uh-huh. Then I think 150 is in target, and I don't see why it should stop there. The Bank of Japan has the same problem as the other central banks. It has been accumulating bonds and, in its case, other investments as well, even equities through ETFs. It's been a very, very big buyer of all financial securities.
Wow.
And the problem is that with rising interest rates, the value of these investments, if you like to call it that, starts going down. So the result is that there is a huge deficit on the Bank of Japan's balance sheet. And it wipes out its equity capital many, many times over. I was also looking at the Eurozone's, the Euro system, which is basically the ECB and the various national central banks. They're all underwater. They are all net liabilities on their balance sheet. Now, this sort of thing, I suppose, might not matter hugely in the normal course of events. But remember that these central banks are charged with underwriting the whole financial system and ensuring that commercial banks do not go under. So we have the potential mess of central banks which need to recapitalize themselves, which in most cases is quite easy to do. But what an embarrassing time to do it when you have got such strongly contracting bank credit. At the moment, it's hitting financial markets rather than, if you like, the non-financial sector. But though actors in the non-financial sector are finding that when they go to the banks say no. I mean, it's as simple as that. So this is a situation where we've got the central banks are bust, and they are the people who are going to save the commercial banking network. You know, this is not looking good.
Well, you pointed out some time ago, and even the Fed here, they bought all these securities, and interest rates are rising, so the value of those securities are declining dramatically, and that most of them are, technically insolvent. I think most of the central banks.
Yeah, absolutely. And as to the point about the Fed it published a sort of a quarterly review, if you like, of the situation, and I think from memory, it was showing that the valuation loss on its balance sheet from bonds, treasury notes, and all the rest of it is in the region of $800 billion. And since then, I would draw your attention to the subsequent increase in bond yields, which I would have thought would take that loss to over $1 trillion. So this is a situation which is not good, but what I would say is that the dangers that America faces, the American banking system faces, are not so much from, if you like, the domestic economy, the domestic markets, though there are dangers there, because your banks are better capitalized than certainly the Japanese, certainly the Eurozone, and certainly most of the British banks. They're far better capitalized. And on that basis, I think that they can weather things a lot better. But the problem is that if you have, let's say, the Eurozone falling over, then you've got all the counterparty risks and all the rest of it. So I think that confidence would help undermine the situation, as well as the reality, if you like, of the transmission of problems through the global systemically important banking system. So this is. I think we really are on the edge of a banking precipice. I mean, that's the only conclusion I can come to. Mind you, I do tend to be too early in these prognostications. So don't hold me to account if it doesn't happen for a month or two. But I would like to just point out that the dangers underneath the hood are very, very considerable.
Well, let's suppose that the yen continues in its direction and it busts through those key levels that you're looking at. At what point do you think that might cause some consternation and lack of confidence in the other major central banks of the West and in the investment community?
Yes, I don't think that in that sense the yen is a problem. I can see that. I mean, basically, the Bank of Japan has got exactly the same problems as other central banks. They've bet the house on low interest rates and interest rates never rising. And I would have to say that the same is with the ECB, the same is with the Bank of England, and the same is indeed true with the Fed. Though the Fed is perhaps a bit more proactive in dealing with the near-term situation. But all these central banks are progressing on the basis that inflation will come back to their 2% mandated level. I mean, that's a load of rubbish, but that is actually what they're saying. That, I think, is what they're now hoping. So this is quite a a serious situation. I think the Bank of Japan, it is at least blessed with a domestic market where people don't actually rush out and pay higher prices for things. They tend to hold on to their money. And this is why the indicated rate of inflation in Japan is running at about 3%, while it's about 10% elsewhere. So this is an important point to understand. The confidence that the domestic users of the currency have in the currency is far greater than domestic users of currencies in other jurisdictions. That is the difference with Japan. What's happening with Japan is that the currency is being undermined by the situation as international operators look at it and see that, this is something, the yen is going down, we don't want to have a part of it. This is yet to be recognized in the domestic market.
All right. Really, so many more questions I wanted to get to, but you've talked on this show about the competing currency, the non-fiat currency that Russia and China seem to be moving towards, a commodity-based currency, and I would guess that they're very much aware of the problems that are going on among the NATO-based countries, the NATO countries, and they must be licking their chops right now, thinking in terms of, well, maybe we can't beat them in a kinetic war, but we can beat them financially. And I'm just wondering, you've made the point that you believe what they're proposing, this sort of commodity currency-based trading currency would morph into a gold-backed currency. Now, when I talk to people, not financial people necessarily, they think that's rubbish. They can't envision ever again seeing a gold-backed currency. Can you explain just in 2 minutes
well,
how it would normally morph into a gold-backed currency?
Right. Well, the first thing that you have to tell the naysayers is that money is only one thing, that's gold. That is the legal position. Whatever you may wish, gold is the only form of money that exists. All the rest is credit. Now, when you understand that, you begin to understand the importance of the relationship between credit and gold. You need to have gold in order to secure the purchasing power of a fiat currency. I mean, it's as simple as that. It's a discipline on the central banks, which the central banks don't want and governments don't want. They want to be able to pluck the magic money tree as much as possible. So the point about what the Russians are doing is they are now, I think, seeing the financial system in the West beginning to, if not collapse, certainly have extreme difficulties. And under those circumstances, I think it's not just a question of if you like, war tactics. It's a question of insulating the ruble, insulating the Chinese yuan from the problems of the West. And their gold reserves stand there, if you like, to help them do that. And I think that's the important point.
Yeah, they've built up tremendous gold reserves, China and Russia. And I know we're not quite sure how many millions of ounces we have, but that's another story for another day. We're out of time, unfortunately. Alasdair, thank you so much for sharing your insights once again with us. It's always greatly appreciated.
My pleasure, Jay.